5 major banks reported earnings this morning. We're going deep on 3 of them. Take your time with this one. There's real detail here. Panic Sell Weekly Bank Earnings Day. Let's look at the charts. I'm Phil McCandlestick. Before we start, a quick note. You're going to hear some system-specific terms in this video. Things like bull flip, double dragon, bottom catch. I'll define each one the first time it comes up. No jargon left unexplained. Let's start with Goldman Sachs. Goldman's weekly chart is in a confirmed uptrend. The trend flip that started this move, we call it a bull flip, fired 15 weeks ago. A bull flip is simply the exact week the system detected the trend, switching from bearish to bullish. Right now, this week's candle is still forming. Goldman opened at just over 1056, and pre-market this morning was sitting around 1051. Goldman reported earnings before the bell today, and the market is still digesting that. Here's the most interesting detail on this chart. 2 weeks ago, one of our confirmation indicators, Chaikin Money Flow, or CMF, which measures whether money is flowing into or out of a stock, had turned slightly negative. That was the one yellow flag we had. It is now fully reversed. CMF is back to a healthy positive reading. That's a real measurable sign that buyers came back in. The one thing to watch is RSI, sitting at just under 64. RSI measures whether a stock is overbought or oversold. Above 60 is considered overbought, so Goldman has been running hot. Combine that with earnings just hitting the tape, and this week's close matters more than usual. Next, JPMorgan. This one has the cleanest setup of the day on paper. 6 weeks ago, JPMorgan printed a bull flip, and on that exact same week, 2 other signals fired at the same time. The first is called a bottom catch. That's a reversal signal that requires several conditions to line up on the same candle. A specific stochastic reading, price crossing back above a key moving average, and the candle closing green and higher than the week before. It's a sign of a genuine bottom forming, not just a bounce. The second signal is called a double dragon. That fires when the percentage of chips, meaning the portion of recent buyers, sitting in profit crosses back above 75% on a bullish candle. It means the majority of holders flip from underwater to profitable, all at once with real momentum behind it. 3 signals same week. That's a rare high conviction setup. But here's the tension. CMF on this chart is confirmed negative. Not just slightly negative, genuinely negative, past our threshold for a real warning. So you've got one of the cleanest trend setups of the day, sitting right next to one of the clearest money flow warnings of the day. Both are true at the same time. Last one, Bank of America. This chart has the strongest underlying momentum of the 3. We track something called fund simulation, a 0 to 100 score that models institutional money flow. Bank of America's fund sim is sitting at 95, and it's still rising. That is an exceptionally strong reading. The chip structure backs that up too. 0% of recent buyers are underwater on this stock right now. Every single recent buyer is sitting in profit. That's about as clean as this system's chip data ever gets. The trade-off is that Bank of America has also run the hardest of the 3. RSI here is the highest of today's banks at just over 66. This is a stock that's earned some caution simply by how far it's already climbed, right as it walks into its own earnings reaction. 3 banks, 3 different stories. Goldman just cleared its one warning sign. JPMorgan has the most confluence, but also the clearest money flow conflict. And Bank of America has the strongest momentum, but also the least room left before it's stretched. Full breakdowns on all 3, plus Wells Fargo and Citigroup, are up now at panicsellweekly.com. The news is noise. The chart is all that matters.